Guys, it's Marcel here, and here's the first part of the education series because here on WAP I will start to upload educational videos for you to actually understand the strategy better and fine-tune everything. So the first video will be about external, internal swing points, and I will help you to understand it better because I have posted this exact picture into the case studies channel on Discord. But I want to make a video because in a video it's always easier to explain that what is going on, and it's just easier to explain in a video. So first of all, in this video I will explain that what is the difference in between swing, external and internal points. So here I just drew an actual chart example for you, beautiful structure. So let's just break down that what is going on right here. Let's just imagine that price is moving in a bullish structure here. Okay, and just ignore this part. The first part we are going to take care of is the swing reversal point. So what you see right here is a swing high point, and this is a swing high point because it broke the previous bullish trend. It is written down here that broke the bullish trend, started the bearish trend. So as soon as price breaks a trend from bullish to bearish, from bearish to bullish, it will be a swing point. So the high point or the low point that broke the previous trend and started the next upcoming trend, in this case, broke the bullish trend, started the bearish trend, will be the swing point. In this case, this is a swing high point. Price is coming down, create a reversal right here. This will be the first external low point. This is an external low point because this is the external structure, the overall bigger structure. We call the internal structure internal because it's inside of the overall external structure. And obviously, the name speaks for itself. It's inside of the external one. That's why we call it internal. So the external points will basically be like swing points, but we only call swing points which broke the previous trend. So in this case, this low point won't be a swing point until it breaks the previous swing high point or breaks the trend. So this right here is an external low point because it started the pullback. And here comes the interesting part, because inside of the previous swing high point and inside of the previous swing low point, in between the structural range, the high and the lows range, there can be found the internal structure. And once again, it is called internal because it's inside of the original structure's range. So the original structure, once again, is up here and down here. Inside everything that happens here will be internal. So the red line here is the internal pullback of the overall bearish trend, bearish order flow. We are bearish, we are expecting bearish continuation trades, but on the counter side, we can take internal pullback and internal continuation trades because we differentiate two types of internal structures. Obviously, once again, the trend is bearish. We are expecting bearish continuations, but here inside of the internal structural range, we can find two types of entries. The first entry will be the internal bullish structure, which is the pullback of the overall bearish trend. So this is the internal bullish structure. And guess what happens here? If, for example, price forms an internal structural point that sweeps out the previous structural lows liquidity, so it forms this type of structure where it sweeps out the previous internal lows liquidity, breaks the high point, there will be the first internal long setup that you can take. And this will be given right here. You're pulling the Fibonacci from the low point all the way up to the high point. And here is the first internal long bullish setup that you can take. And this is still internal. This is still inside of the previous swing highs and external lows range. That's why we call it internal. And once it plays out, once the internal bullish pullback plays out, we will switch into a bearish internal structure until it breaks the previous external low point. So the green line right here is the internal bearish structure that leads always, not always, but usually leads to the break of the previous external point. It continues the structure, but it's still inside of the previous externals and swing highs range. Okay, so the actual trade that can be taken here will be a reversal one that lines up with the overall external structure that is going to the downside, or can be a continuation one. Let me just delete the green line. So how can it look like? For example, if price sweeps out this previous high point, there will be a sweep of the liquidity right here, and then price breaks the low point to the downside here. There can be a beautiful internal continuation, sorry, not continuation, but reversal trade, because the high got swept out, low got broken. You can take a beautiful swing What am I talking about? You can take a beautiful internal trade, reversal trade right here. And this is the first internal setup that you can take. And as I told you, there is a second one, which is the continuation, which is the exact same one as the bullish internal continuation trade. But obviously, it continues the structure to the internal direction that will lead the external low point. So for example, if price comes up here, sweeps the high point, and then breaks this low point, then there will be the beautiful internal continuation trade that leads to the break of the structure here. Okay, as soon as this low point breaks, as soon as the external low point breaks, then price continues the external structure and we can be expected, the pullback again can be expected just like it has happened here, and the continuation once again can be expected. And in this case, when price breaks the low point, breaks the previous external low points range, the highest point before the external low point break will become the new external high point. What is it here? Let me just remove it. Yeah, that was the external one. I meant to remove this one. Okay, removing every unnecessary line. So this new high point will be the external high point because this is the highest of the movement. This is the one that actually continued the bearish structural breaking, external low breaking movement. So this is the new external high point, highest of the movement that broke the low point, right? And once again, if price creates a pullback here at this region, for example, it will be the new external low point. So there will be a new external low point given, and this will be the new external high point. Everything that happens in between the highs and the lows range will be the internal. Once again, internal means inside of the externals range, inside of the original ranges structure. So everything that happens in between these two red lines will be the internal structure. Once again, continuation, reversal trades can be taken here. A beautiful internal long pullback can be taken here, just like it has happened here. A beautiful reversal bearish trade can happen that will, once again, will still be an internal trade. Beautiful continuation trade can happen. And once again, if price breaks the low point, the previous external low point to the downside, then a new external high will form. And this high point will be the highest point that initiated the break of this low point. There could be many other low points below the external one. There could be lots of internal low points below the external one, but this highest point will always be the external high point. And here is the last point of the structure, the swing low point. Swing low point will be the lowest point before the trend changes from bearish to bullish. So for example, if price comes up, breaks the previous external highs range, then this will be the swing low point, and a pullback can be expected all the way up to the swing high point, and price will sweep out this overall internal liquidity, because in this case, everything that happens in between the swing high and the swing low will be the internal structure of the swing structure. And in this case, everything that has been happening and going around here will be the liquidity that will fuel the overall swing movement. And here, a beautiful swing reversal can be expected. For example, a sweep of the high point, break of the low point, and everything can happen once again, because if price breaks the previous swing low point, then this will become the new swing high point. And obviously, everything can be duplicated here and can be moved again to this structure. So this is the difference in between swing, external, and internal points. And let me just show you a real chart example for this, because that's where you will understand everything. All right, so here we are on AUD CAD. And on this pair, I can beautifully present that how the internal external swing structure works. So here has been a beautiful bullish structure coming all the way up to this high point. And ever since this high point been created, price broke the previous external low point, meaning it changed the trend. So the trend has been changed from bullish to bearish, meaning this high point right here will be the new swing high point, because it broke the trend from bullish to bearish. After this high point broke the trend, price started to pull back here at this region and created the first external low point right here, because this low point created the pullback. After the creation of this low point, price started a beautiful bullish internal pullback. So here was the bullish internal pullback coming all the way up to this point. And ever since this point being created, price started to form a bearish structure, and breaking the structure to the downside means there could be a reversal, could be a continuation trade opportunity. So this is the internal bearish continuation of the original bearish trend. It leads all the way down to the break of the structure of the previous external low point, and as soon as this low point breaks, a new external high point will be created. So this low point being broken right here exactly on this line. So everything you can see in between this high point right here, sorry, in between this swing high point and in between this first external low point is internal structure. So everything that is going around here is just internal structure. That's what we call internal trade, internal structure. So if you see something like internal in the Notion template, which I'm sending you every single month by the end of the month, showing you the monthly results, and I'm stating that it's an internal setup, that I'm referring to all of the trades going around here in between the swing point, in between the external low point, or in between the external high and external low point. Or obviously in a reversal, in the other scenario, in the bullish scenario, external high and swing low point. Yeah, sorry. So yeah, as soon as price breaks this low point, there will be a break of structure, which will mean the highest point of this overall pullback will be the new external high point that initiated the break of the previous external low point. So in this case, this high point right here becomes the new external high point, and this will be the new range as soon as price forms a new reversal. So if price reverses again somewhere around here, which has happened, here is the new external low point. Obviously, if it creates the reversal to the upside, in this case, this will be the new external high point. This is the new external low point, and everything that will happen in between the external highs and lows range will be internal structure. So there could be, beautiful internal bullish pullback trades be taken. There could be beautiful bearish reversal internal trades be taken. Internal bearish continuation trades be taken, and as soon as this low point breaks, it will be the external break of structure, meaning a new external high point will be created right here, and a new range will form. And when you see something like external written down in the Notion template, in the monthly results, it will mean that we took an external trade, which will mean that, for example, we took a trade where price rejected on an external point and not on internal ones. And what do we mean under this? It means that, for example, let's just imagine that here is a structure where prices broke the previous bullish trend to bearish, then it created this high point, which let's just say it swept out the previous highs liquidity, and this is how it reversed to the downside. So there was a sweep of the liquidity, and there is a break of the structure. After this, price creates the pullback right here. There will be lots of internal bullish, bearish reversal trades, blah, 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 blah. But what we mean under taking an external trade is that we take the trade from this high point to the low point, and the entry will happen, for example, here on the 71 line, and not on the internal points where, for example, the sweep of the high happened, break of the low happens, and there is an internal reversal opportunity. This is internal, and if you take this one, this will be the external. Both of them can be taken at the same time, because sometimes price will form this. Sometimes price will form an internal reversal to the downside. You can take it, you can TP it out, and price decides to reverse to the upside. And even here, you can take internal bullish pullbacks too. Even here, you can expect on the sweep of this low point break of this high point, and you can take bullish pullback trades up to this external 71 level, and this will be the external trade. And once again, if price continues to the downside, breaks the external low point, a new external high will form. So if price creates the exact same structure like this, moves to the downside, comes back up, creates the reversal, creates the internal bullish pullback, and once again, you pull the Fibonacci from the external high to the external low, and you enter here on the 71 external Fibonacci level. This will be an external trade. And everything that happens in between the external points, like the bearish continuation, like the bullish reversal pullback, like the bearish continuation into the original direction, will be taken as internal trades. And if, for example, price can't reverse all the way back up to this external level, but decides to come back down and break the external low point, obviously, you just modify the Fibonacci, and you just modify the Fibonacci all the way down to have a swing point. So price just comes down all the way down to this point. And in this case, you can pull the Fibonacci from this high point to this low point. And this level right here will be the 71 swing level. And if you enter here in the market, that will be a swing trade. And this is the most dangerous type of trade. And that's why we don't take swing trades, because swing trades usually fail. Like 70-80% of the time, swing trades will sweep you out because we are trading on a 4-hour time frame. And if the trend changes and it equals to a really significant trend change, then likely it won't respect that level. So that's why we only take external and internal ones. But the internal trades are the most profitable trades we can take. So I hope this video helped you to actually understand what external, internal swing points, structural points are, and hope you can take something from home from this video. So yeah, that's it, guys. Cheers. Thank you for watching. And I will be making videos like this on a weekly basis. I will be posting videos for you like this education topic videos every week or every second week, bi-weekly. We will see if we can have nice topics that you want me to break down. I will be posting them for you weekly. Otherwise, yeah, thanks for watching the video. Cheers and goodbye.